Hello, everyone. I'm Eric from Summit Metals. We're super excited today. We've got one of our favorite guests, Bald Guy Money, is with us today, and we're going to talk about what's happening with gold and silver over this last crazy period of time. So please join us. Please like and subscribe. I think you're going to really enjoy the conversation. He's an absolute expert on the topic, and we're really excited. Thank you so much for joining us.
Thank you for having me, Eric. It's a pleasure to join you. I love talking to you. So for me, this is just fun.
A lot of people don't realize, but we actually talk quite a bit and discuss many of these topics. And at some point, we've kind of like, we have to like open this up to the world to understand or to hear some of the things we believe and I think are important for them in making their own investment decisions. So if it's okay, I'm going to jump right in and let's get to it. You ready?
Let's do it.
All right, good. So we've seen this crazy surge in gold, right? Where over the last 3 months, it's up 18%. We've seen even the last month, it's over nine in what, less than 15 days, like crazy growth, over 3,100 an ounce again. What do you think are the real primary factors driving this rapid acceleration?
People keep talking about a trade war, tariffs. It's a big focus, right? But what if we zoomed out a little bit and asked ourselves the question, is this potentially a currency crisis we're in? Is this potentially an acceleration of de-dollarization that we're seeing? Why did, for example, yesterday, we're recording it, today's Thursday, so yesterday was Wednesday, why did we see yields on US bonds, US treasuries jump so quickly? For me, that indicates somebody has come into the market and they're selling bonds. So who has a lot of US bonds that might have an incentive to sell them? I mean, it smells a little bit like China, right?
Yes.
So, yeah, sure, we're talking about trade wars, we're talking about tariffs, but I think the real question that we need to be asking ourselves is, are we in some kind of currency crisis or even currency war? And I think this is what's really accelerating the performance of gold. We're not seeing any slowing down of central bank buying for gold, and retail people in Asia and Europe are starting to participate slowly but surely. The only people that aren't participating yet are the people in North America, really, specifically in the United States. But we both know it's only a matter of time before they get with the program and they start buying it. The only sad thing is they're not going to be buying it for around $3,000 an ounce. They're going to start buying it around 3,300, 3,400 an ounce. But I think those are really the factors that we're seeing driving gold up right now, despite we can call it a major crash in the stock indices right now.
So, why do you think it is that when countries become challenged, like let's say with tariffs hitting them or things like that, there's always this like race to devalue their currency. And of course, we know what that does to things like gold and silver. But why do they do that? You've got such a good grasp of kind of the economics of what's at play with gold and silver. Why do you think these countries race to devalue their currency?
Well, if we look at what's happened over the last few crises, the solution has been just to reinflate the bubbles that we've created, right? Now you have tariffs coming in on Chinese goods. China has always floated its yuan against the US dollar in order to make its exports attractive for American consumers. So certainly there may be a certain element of further devaluation of yuan there in order to maintain that competitiveness it's going to lose as a result of tariffs, although I think the tariffs now are so high that I don't think they can devalue the yuan enough. And maybe it's a matter of just trying to devalue it a little bit more versus other currencies like euros or, South American currencies, et cetera, just to pump out the goods they've created to those markets. But why do we do it? Well, it's instinctual, I think, because it's what we've been doing. And, people aren't the smartest creatures, especially when they're within groups. And I think they tend to return to solutions that have worked for them in the past. And, it's kind of kicking the can down the road. And, it's funny. I had a meeting at my bank yesterday. I meet with their head of stock trading from time to time, and he's convinced that the United States is not going to be devaluing the currency, that they're not going to be printing any money, that the Federal Reserve is not going to come and save the day this time, even though we're seeing yields stay stubbornly well above 4%. I think the 10 years at 4.3% right now, while the country has $9 trillion in debt to roll over this year. And you have to ask yourself the question, is the Federal Reserve going to let the US federal government, are they going to leave them out to dry? I don't think so. And refinancing $9 trillion in debt at 4.5% is killer for the United States government. So I think we're going to see them intervene because, again, that's the solution that's worked in the past. And I don't think people are ready to take their medicine, especially in countries and democracies like the United States, where when is the next election, Eric? It's in November 2026, right? That's when you have the midterm, right? So nobody's ready to take the medicine because the current administration is fearing losing control over the House of Representatives, which would then cost them a lot of influence and ability to pass things through quickly and in line with their vision. So, maybe I didn't precisely say it as well as I would have wanted to, but I do think this is just kicking the can down the road once again because it's using solutions that we found to be successful in the past.
Well, no politician, right, wants to be the guy bringing the medicine. They want to be the guy just giving people things. And at some point, of course, you just can't do that. So let me shift just a little bit. So when we talk about tariffs, I think it's correct to say that for every 5 things we buy from China as Americans, they buy 1 of ours, right? They have their little lever, which is to sell treasuries. They're already doing it. I think the view was, oh, fine, then if we're not selling to America, we're just going to dump it to Europe. Now, I know you're in Europe. I think the Europeans kind of figured out quickly that maybe they don't want to be the place where China chooses to dump all their goods too. Do you think that these actions that are happening related to tariffs around the world, do you think that's driving the very essence of people starting to see gold as truly a safe haven asset with these, with the implications that are happening around the world?
I see it as something different. Inflation is something we've always talked about, right?
Yeah.
But 40% devaluation of a currency over the period of, let's call it 15 years, is something, you don't see it. It's like when you start gaining weight, right? You gain 1 kilogram or 1 pound a month for 2 years until finally you look at yourself in the mirror and you see you've gained a lot of weight, right?
Right.
But what happened during the C-19 crisis, the C-19 pandemic, is that people saw it right away. You didn't have to wait 15 years to see that 40% devaluation. People recognized that it can happen much quicker than that. It wasn't the frog sitting in the pot while the water's slowly getting warmer and warmer, right? It was just the frog, who is us, were thrown into a pot of boiling water. And I think we really learned a valuable lesson there. Some people have now understood and come to understand that gold is a mechanism to protect you from those things. Other people have gone in other directions. Some people say that Bitcoin is the answer. I don't want to get into who's right and who's wrong on that topic, but my whole thing is that I think at least the regular citizenry now really has a better grasp of inflation, especially in the United States, because you never saw those levels of inflation over such a short period of time in the United States. At least many people my age. You might have to go back to the late 70s, early 80s before Volcker stepped in and raised interest rates dramatically. Yeah, maybe there were those levels of inflation then, but people who are my age in their early 40s didn't really experience that. So that's the first time we've really experienced these massive levels of inflation, which have forced us to seek out better ways of protecting the value of our cash savings. And gold, of course, has been one of those options.
The Bitcoin discussion is interesting. I mean, I own some Bitcoin. I believe you do as well. And
I do.
It's kind of portrayed as a safe haven asset, kind of the digital gold. One of the things I looked up just recently that I found really, honestly amazing If you took a kilogram of gold, say back 3 months ago, you could buy 0.82 of one Bitcoin. Okay. If you look today, your kilogram of gold buys you 1.24 Bitcoin. There's been that much of a shift as things have really hit the fan and people have really sought the safe haven benefits of, say, real gold. You can see, though, that gold has risen dramatically at the same time Bitcoin has not. So is that to say they don't both have a place? Of course, I do. I do believe they do, but they're not the same asset. They're just not. And as much as people try to make it that way, it doesn't make it so.
Yeah, absolutely. I mean, gold has 5,000 years of history on its side, whereas Bitcoin doesn't. And for me, Bitcoin is more of a speculative play. Maybe it'll be something one day, and I have enough money there, whereas if it goes to zero, I'm not going to cry about it. But if it does all of these magnificent things that some people say it will do, fantastic. Why not benefit from it? That said, the pillar of my, let's say, financial safety net is built in gold and silver, period.
Yeah. Do you see central banks as a result of what's happened in particular over the last week? Do you see them changing their strategy of accumulating gold?
I think if anything, the central bankers' strategy has been, what's a good term to use? Justified. They've justified their actions, and they look great, right? The head of these central banks who have been pulling the trigger on these big gold purchases walk into their office every day, walk through the hallway past all the people.
Yeah.
Look at what they hold their heads up high, especially the central banks that have been buying a lot. You're talking about, of course, China, but there are others. Poland is another one. Czech Republic is another one that has purchased a lot of gold over the last couple of years.
Germany,
and those central bankers are walking in, holding their heads up high, and you might almost get amongst central bankers this confirmation bias, whereas it's worked out so well for so many central bankers that they might just not only continue to do it, they might ramp it up.
Yeah. So let me ask too, there are some analysts who think that gold and silver are too high. And they think that because of what's happening in the economy now, in particular over the last week, tariffs and things like that it's going to drive down demand. Do you think if that were to take place, that would affect the price of gold and silver going forward?
Well, I read an article the other day where it said the price of gold is its biggest enemy, and that a higher price of gold is the solution for the higher price of gold, that eventually people will just be priced out of the market and the price will have to correct as a result. I don't agree with that, because when you're talking about, for example, central banks who are driving a lot of the upward movement, tell me, are they buying ounces of gold, or what are they buying? They're buying tons of gold.
Right.
And it's not their money that they're spending at the end of the day. So the fact that their past actions have been justified up till now gives them even more confidence to use money that's not theirs to continue to scale into it. That's one side of it. On the other side of it, if we look at the mining aspect, right? You could argue, well, are the miners going to flood the market with gold right now? Well, number one, I'd say the miners have learned the lesson. And I think the gold miners take some cues maybe from the diamond business, in that they know it's not in their interest to flood the market just to temporarily gain from where the price is today. And we know that the average price of gold, if we take a look at the average price per year since 2015 when it bottomed out, is rising significantly. So they can basically sustain their margins. But on the other side of that, I've seen some miners, one miner in particular that I really like and I think has great potential, and I don't usually talk about this publicly, but I'll name it here, which is B2 Gold. B2 Gold actually revised their production targets down this year. So I don't think we're necessarily going to see price become the enemy of gold because people will stop buying. I mean, remember, they always have fractional options, and we are seeing people increasingly move into those fractional options where maybe an ounce won't be the standard that you buy anymore. Maybe it's going to be a half or a quarter ounce. But then on the flip side of it, I don't believe that the miners are necessarily going to destroy a good thing that they have going for them. I think that they're going to try to keep the supply into the market stable, and the demand is really only remaining stable and steadily increasing, in fact.
Yeah, it's interesting on the retail side. This topic of fractionals. We are still seeing large purchases of fractional coins, right? Dimes, quarters, half ounce, and even an ounce. I guess an ounce is fractional if you're a big player that starts at a kilogram and goes up to hundreds of ounces, right? But I can tell you too, though, in our own business that since we started this bullion reserve, we've seen a lot of orders come in for big purchases, starting at 500 ounces of silver and going up. And we've seen people buying kilograms of gold and tubes of eagles and tubes of buffaloes, things like that. So that buyer is there. They're not
I
as
suspect,
prevalent.
Eric, that there are
Yeah,
people who are only just getting on to it right now.
right.
People who, we know that the boomer generation has had a love affair with stocks, with the stock market, right?
Yes.
And maybe some of them are starting to look at their portfolio. They're starting to look and hear my message where I've said, look at what happened between 2000 and 2012, where the S&P 500 went and was basically, you could draw a flat line between them, right?
Yeah.
I think people who are boomers, who are looking to enter retirement, are looking for a way to diversify away from them. And these are people who have money. I mean, I don't, off the top of my head, if I had to guess what the median net worth of an American boomer is, it's probably around $500,000, $600,000. So these are people with some significant wealth built up and looking to get, maybe 5 to 10% of their assets allocated. And that bullion reserve is a perfect place to do it because they can get those larger purchases secured, obviously, at a slightly lower price per unit.
Yeah, I tend to think that they're kind of getting religion, as you've said. And so the way you get there fast is you buy bigger because you can get to your position established quicker. Now, I know you and I both advocate dollar cost averaging going forward, but at some point you need to get in the game. And to get in the game,
I've been doing it for 16 years. It's
yes,
easy for me to say dollar cost averaging when the price is now hitting $3,000 because of all the gold and silver I've purchased over those 16 years.
right, exactly. All right. Well, do you see gold in any way not continuing to be important in our future with all the changes that are happening?
No, I think the future is guaranteed. Now, that doesn't mean, and I want to kind of come back to something I said a little bit earlier, that doesn't mean we're not going to see a pullback. And I even presented in my last YouTube video this past Sunday that, as this market correction and sell-off deepens and traders are getting more margin calls, as the yen carry trade also starts to unwind more and more. It's not fully unwound yet.
Yes.
I think we could see pullbacks, but that's just the time to get aggressive. And I don't think these pullbacks are going to be deep anymore. They're going to be extremely shallow. And why is that? I think that is because we are hitting a new phase of money right now. As I mentioned earlier, we could be in a currency crisis right now. And if we look at history, I think we see phase one of this kind of shift in 1971, when Nixon takes the US dollar off of the gold standard, right? And it really started to reach a crescendo in the early 80s, where people were like, oh my goodness, the dollar is cooked, inflation is high, we need to get out now. But luckily, as a kind of a saving grace for the US dollar, when the Soviet Union collapsed, it was a major incentive for a lot of central banks to cozy up to the United States, to say, okay, this is the one remaining superpower now. We're going to use their currency and we're going to sell our gold off. And that's what you saw from 1989 on, straight until 2009. That's a period of what, 30 years?
Right.
20 years, sorry. 20 years, that central banks were selling gold net, and we're talking tons of gold every single year. And what were they doing? They were selling gold and they were building up their dollar reserves because they could earn a few percentage on their holdings, right? Now, coming back to what I said about the frog in the pot, right? And seeing large amounts of dollar inflation in such a short period of time, why did central banks accelerate their net gold purchases, which started in 2010. Why did they accelerate in 2022? That's the moment, right?
Yes.
Well, that's when US dollar inflation, the CPI, was almost at 10%, right? Which tells me, if I'm a central banker, what good is holding a US dollar at a couple percent maybe a year when all of that interest that I've gathered over the 20 years of holding it since I sold all my gold can be wiped out in the matter of a year or two, just because, somebody at the Federal Reserve got trigger happy on the dollar printer. So I think that what we've seen, obviously, since 2010, when central banks became net buyers of gold again, and accelerated from 2022, tells us that the future is actually gold, and it's likely not fiat currency. And the trust, at least for this generation, for anybody watching this for the rest of their life, that trust in fiat has been broken.
Yeah. I mean, much less if a government like the US chooses to freeze your assets, right? Then it doesn't matter how much they've gone up or down, right? You have no access. So let's say you're talking to your best friend. This person walks in and says, you know what? I see what's happening in the markets. I'm concerned. I've probably lost a lot of what I thought I had gained in the stock markets. I recognize I need to maybe invest in precious metals. What do I do?
Well, it's something that I can relate to because I've been talking to my neighbor. In fact, my neighbor is kind of that kind of guy. And he's coming over for a coffee tomorrow morning. And basically what I want to tell him is, okay, look, you have a cash position. Hold that cash position. And I'm not going to tell him go all into precious metals today, right? I'm going to say, how much of this cash position would you feel comfortable holding in precious metals? Once we've determined that, you have to determine a schedule. And then how much he can add on to that schedule moving afterward. Because, maybe this is not going to be a popular message, but I do believe once we start to reach rock bottom for the stock market, that will be a fantastic occasion for people to deploy the rest of their cash position that they didn't allocate to precious metals towards stocks and ride that back up. It's not the end of the stock market. It's not the end of capitalism, right?
Right.
That said, I would sit down with that person and I would say, okay, what can you afford? And are you okay living without that money, having it kind of out of your life for a while? Whether that's a tenth of an ounce, a quarter of an ounce, a half ounce, or an ounce every 2 weeks or 1 month. And I would get that person on that schedule. And to be honest, where I would start, especially considering premiums, I would say try to start from a quarter ounce. If you can make that buy, if you can bite that bullet, if you can do without that much cash in your bank account, whatever, start from the quarter ounce. And then set a schedule on buying those quarter ounces, move up from there as you begin to understand it, feel more comfortable with it, and just stick to it for as long as you can.
I think that's fantastic advice. I tend to think of it like the trend is your friend. I think we both agree that gold, precious metals are going up. So many things are happening, in the economy, debasement, inflation, so many different things. The trend is your friend. It's moving up. Now, does that mean if I buy now, it's going to continue to go up? No, it will in time. But what it means is that by becoming systematic in your purchases, if it drops down, you're buying at a lower cost. If it starts to go up, you're paying a little bit more. But over time, it's going to average out and you're going to end up in an incredibly solid position going forward. So
can I say one thing before we finish?
Please, yes.
I've got one more thing that I want to say.
Yeah.
There are so many people who draw that straight line from 2011 and say, well, this was the top and you haven't done that well. And, that tells me that person is an amateur investor and doesn't really understand investing or the market or long-term exposure to an asset, buying the average price over time, especially considering the fact that those prices at the 2011 blow-off top for metals lasted all of 1 or 2 months, right? So what I want to say on that topic is you may get into a situation where at some point we will experience a blow-off top. Is this the blow-off top? I'm certain I'd put my reputation on the line right here on this show that this is not a blow-off top for metals. The blow-off top is still to come. But what I will say is they will have blow off tops, just like any asset, by the way. Amazon had a blow off top with the dot-com crisis, with the dot-com bubble, and didn't reach that level again until I believe 2007. So you can't convince me that just because all those years passed where it didn't make a new high, that it was a bad thing to hold or a bad thing to scale into or a bad company and didn't make any money. That is a bad argument. So I just want to say to everybody watching, yes, sometimes it will require patience. I like to, as a general rule of thumb, if I have $100, 80 of those dollars should go towards gold, and $20 I can speculate a little bit on silver with.
Yep.
But that, especially when it comes to silver, because people love to draw that straight line. One other thing that people don't understand is that in 2011, the US dollar on the DXY, the Dixie index, was at 73. 73. We were at 104 just last week. 104 is what, about 43% higher than 73. And that's something that people do not understand who are looking only at the US dollar chart. Because what's happening for people in Australia, Canada, Europe, UK, those prices in some of those countries are already higher than they were in 2011, especially for gold. I mean, gold in Australian dollars is literally making a moonshot. And if it's not at an all-time high for silver, it's almost there. So, I do understand some of the skepticism that people have towards precious metals when they're looking at that point-to-point basis. But what I'm saying is there are a lot of other things you need to take into consideration when making the decision to start scaling into precious metals over the long term. And that's what I wanted to say. Sorry.
Yeah. No, that's perfect. Perfect. All right, everyone. Thank you so much for joining. Thank you for being with us today. I just really, really respect you as a person, as an executive of what you do. It's fantastic. So thank you again. And to all our followers out there, please like, subscribe, check the bell. We've got lots of great content coming. We're so excited to have you here. Please comment. I know I read them all. I'm sure Bald Guy will take a look at them as well. We love your questions and happy to answer. Thank you so much and happy stacking.